Hi everyone, I'm Doug Alsdorf, and in this short video, I'd like to answer question 2 in the quiz for chapter 9. As always, in order to access the quiz, you can go to the WordPress page, click on quizzes, and we're going to scroll down to find the chapter 9 quiz in PDF format, and we're going to have a look at question number 2. Question number 2 asks us to compare the stock prices for two really well-known utility companies, American Electric Power, which supplies electricity here in the Midwest, and Pacific Gas and Electric, which supplies electricity along the West Coast. And we're going to compare their two stock prices with a $15,000 investment and growth with dividend. I like to do this using Morningstar. I think they do a real nice job with their charts. So we're going to plot first off. I've already plotted AEP starting in January 2024. And yes, 15,000 growth with dividend. Let's now add Pacific Gas and Electric, PCG, to this plot and see which one is done better. While that loads in, I invite you in the question to suggest that if you're aware of news during late 2024 and early 25, you should be able to pick ahead of time which one of these did better. This was a time when the Pacific Palisades fire devastated a certain small section of Los Angeles, but still important because a lot of houses, well over 1,000 houses, burnt down. And we would expect then that a utility company would have a stock price response to that. And indeed, we see that right here in red is Pacific Gas and Electric, and their stock price collapsed right here in early 2025. And the question then asks us which one has done better since January 24, and clearly AEP has done better. So we're going to write that down as our choice. But the question also invites us to have a look at the stock price starting in January 2022. See what happens if you start it then. So let's click on the date to change that to January, early January of 2022. And now we see that for several years, we'd have been very happy having purchased Pacific Gas and Electric. And then all of a sudden, its stock price drops really sharply as a response to that fire. The moral of this story is that this stock is a reflection of its various statistics like its price to earning ratio and so on. But things happen to companies that are outside of their control. In this case, the fire happened and it was outside the control of Pacific Gas and Electric. And so that was not something that was predictable. This is an event that is not predictable in the future. No assessment of any of the technicals or fundamentals of this company would have suggested this stock price drop that we saw here in January 2025. It's a very clear indicator to us that we cannot predict the future. Let's scroll down now and have a look at the answer to question 2 just to make certain that we did in fact get it correct. So we'll scroll down here to question 2, and we wrote down that AEP was the better stock, and the answer provides some additional details regarding the fire. Okay, I hope that's helpful for you.